As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a first-time guest tonight. Jeff Clark, a senior precious metals analyst from goldsilver.com, is with us here on Reluctant Preppers. He's going to talk to us about a recent article he wrote called Why I'm Not Worried About Where Gold is Headed. Jeff, thanks for joining us here on Reluctant Preppers.
I'm glad to be here, anxious to talk to your audience.
Since this is our first time here with us, could you give us a quick understanding of where you came from and how you got into this business?
It's actually an interesting story. My family does own some mining claims, mostly gold and silver, in California, Nevada, Arizona. And my dad, when he moved to California, became very interested in this. And so he started buying up mining claims. And this was probably 20 years ago. And started working them. And he's found some various things in that. And I always enjoyed it, but panning, and we're talking about placer mining, right? So it's the small stuff. It's not mechanized mining. So placer mining is taking a pan out there in the river and that sort of thing. And
your dad's a prospector?
My dad is a prospector, and
wow.
he looks like one, and he could be in a movie, as a extra for these old westerns or something. He looks the part, and he's getting up in years now, so it's harder for him to get out, and so he's let some of the claims go. But I always enjoyed, getting outdoors and, of course, finding gold. But it's kind of like fishing. You never know what you're going to find when you go out there. You could spend all day and find nothing, or you could find something in the first 10 minutes. So you never know what you're going to find. But so I've been to a lot of these claims out in the middle of nowhere, all over the place, and the largest thing he ever found was like a 3.5 ounce nugget.
Holy moly!
Yeah, it was part of a cluster of other ore. It was kind of mixed in there, but it's really pretty, and there's about 3.5 ounces in there. That's the biggest find he ever had. And we once had something we tried to sell, a claim we tried to sell, but the last minute they backed out. But at any rate, I've been exposed to it. My dad's been a big part of it. He's even won some gold panning contests and things like that. Yes, they do have those kind of things. And
he's got the technique.
He's got the technique down. Yeah, he's definitely not the best in the world or anything like that. There's some guys that are really, really good at it. But
so how did you get from being the son of a prospector to being a senior precious metals analyst at goldsilver.com?
Well, I don't know if anybody knows my name or not, but I used to work at Casey Research, and I've always been a good writer. So I combined my love of writing with my love of gold. And I got hired at Casey Research by submitting some writing samples and things like that, and went through a compliance process with them, and they liked what they saw. I started out on a probationary basis and ended up working with Louis James, who runs International Speculator at Casey Research. And so he and I were partners in crime, I guess you could say, for many years there. And so writing a newsletter. Then I went to the Hard Assets Alliance temporarily after there were some ownership changes at Casey Research, and stayed there for a little while. And then I moved over to goldsilver.com, and that's where I've been ever since, just writing strictly about gold and silver.
Well, your recent article entitled Why I'm Not Worried About Where Gold is Headed was eye-catching, and as part of your writing skill, obviously writing titles is part of that. So it was a very good title, and it drew us in because we have a lot of guests on our channel. A lot of our audience are keenly interested in lowering systemic risk that they can't control from in the economy and in the monetary system and in the debt-based banking system, lowering that risk to their family by not participating as most consumers are apt to in the riskier portions of our economy, but instead finding ways to protect their families. So a lot of them are keenly interested in the direction and the how this is going to play out, and making sure that they're on the right side of history as things unfold, literally. So your article about why you're not worried about where gold is headed, and it was kind of interesting because in our correspondence by email around that, you clarified that it wasn't that you don't care where gold is headed, it's that you're not worried about it. So could you
exactly
make that distinction for us, and why is that important?
Well, it's an interesting story. I was on a plane, and I was in business class, and I sat down next to a gentleman who was in a tie, obviously, a corporate type of guy, and we struck up a conversation. It led to what do you do for a living, and I told him. And he said, so you own gold? And he got this puzzled look on his face, like, why would you own gold, And I said, yes, I do. And, of course, I don't tell a lot of people I have gold. When you're in a public eye, you have to be careful about that sort of thing. But he looked at me and says, well, okay, well, why gold? And I could tell by the look on his face that he genuinely wanted to know. He wasn't challenging me. He wasn't mocking me. He genuinely wanted to know, why do you own gold? And this was earlier this year. So gold had been going up, quite a bit. We all know it's been up a lot year to date, but he still couldn't understand why someone would buy physical gold. Why would you buy gold, physical gold and silver,
Sure.
And I realized that I had a one paragraph pitch I needed to make to this person to explain to him why I own gold. What was the core reason that someone who knows nothing about gold and genuinely wants to know why I own it, what is the one thing that I could tell them that would help them to understand not only why I own gold, but maybe why they should consider it for part of their portfolio? And this is what this article was, the outcrop of that thinking of mine in the few seconds I put together in my head why I wanted to tell him why I owned gold. And the real thing for me is not just the reasons I own gold, but the title of that really is true. I'm not worried about where it's headed. I really am not. And that's because if you go through the list of reasons, which let's face it, the reasons that we all own gold all center around one thing. And it's what our government has done to our monetary and fiscal state of affairs. Everything, the reasons you own gold all center around that. They all come back to that eventually. You can have other reasons that you own gold, but it all comes back to that. Think about it. How much gold would you own if there had been no quantitative easing, no money printing, if there was no government debt, if there were no government deficits? We were always in a surplus every year. There were not only no negative rates, but bonds actually paid you something reasonable, tangible, that you could actually see your bank account growing. What if there was no extra, money printing, excessive credit? What if they were actually handling the state of our financial affairs properly and healthy?
And responsibly.
Yes. And all of those things have been mishandled. They're completely out of whack. And so I don't believe they're in a free lunch. I don't think you can do those things and it's all going to be fairy tales and unicorns. You can't escape reality. There is no free lunch. And so there's going to be some type of ramifications, some type of fallout. There's the systemic risk that we all face right now is very, very high. The level of risk in the system right now is very, very high. And we didn't even go over all the other reasons that that you might own gold. But the point is the systemic risk is heightened right now. And we can talk about Trump if you want, but the bottom line is a lot of these things are baked in the cake. It's really not going to matter, who the president is.
Right.
All these things can't be resolved easily, quickly, and without some kind of fallout or pain or what have you. The only question in my mind is, how does this process play out? Do we get one big overnight crisis where we wake up the next morning and the world's on fire in some way, or is it drawn out and lasts over a period of years? And I realized when I asked myself that question that I think the answer is, and it's just my opinion, but I think the answer is we're probably going to see a series of crises. There's probably going to be one, and then another, and then another, and then another. You think back to 2008. So we, a lot of people own stocks, and we watched in horror as the stock market fell. But remember the year before what happened to the housing market. So we had a housing crisis one year, and a year or so later, you had a stock market crisis. And I think we're going to have a repeat of something like that. It may not be those two things. It probably will, but who knows? My point is, it's probably going to be one crisis, and then things might look better or stabilize for a while, and then it'll be something else, because we have so many things going on, all of which center around how our central bankers and our politicians have mishandled our money and our finances.
In addition to major crises or series of serial crises, you've got the backdrop of this continual drawdown of the value of just about anything that you can put your hands on, if it's certainly anything related to the money supply or any savings or investments or insurance or anything. You've got people keep talking about upcoming bankruptcy of Social Security or of different pension plans or different things. All these kind of crisis moments that will come, but along the way, every day, it's a continual stealth taxes one way or another through, the AMT being not indexed for inflation, so more and more people being pulled into alternative minimum tax.
That's right.
And on and on and on. Just keep on going down the line. It's this death by 1,000 cuts that's happening even in the absence of overt crises. So that just bolsters that's the backdrop that gives you the foundation under which everything's sliding down, regardless of when the crises come. So
yeah, that's a good point. It's been a seeping type of inflation, and inflation is officially low, and
yes.
And it is. But
we buy various Ziploc bags for deer. We looked our favorite brand of these really sturdy 2.5 gallon Ziploc bags. The box now holds 11, where it previously held 12.
Exactly.
That's an 8% inflation, even though the price didn't change. That's 8%.
Right. Yeah, I've noticed that in many things. Yes, that's true. But more to your original point is that even though inflation is low, it's really seeping into our economy more than people realize. Just since, remember, everybody was always worried about Y2K back in 2000. Since that sure. time, okay, in 15 plus years, whatever, the value of our currency has been devalued by 28%. 28%. And inflation, officially, the CPI, has been really low. But when you add in the cumulative effect of this going on and on and on, it's 28%. Most people find that hard to believe, but you can only buy, what is that, 72% of what you could buy back in 2000 with the same dollar today. And that's with low inflation. So if we get real inflation, there's going to be a serious wake-up call. We have not had, significant or high or let alone runaway inflation with this generation. They're completely unprepared for it.
In giving a pictorial representation of how far out of whack, as you say, things have been taken by government interventions, you have a graphic chart, a bar chart near the beginning of your article, where you're contrasting the value of all the gold ever mined versus some of the recent government interventions. If you could just tell us sort of what the nutshell takeaway is.
Boy, that really is a picture that's worth 1,000 words. If you could share that with them or something, because what I did was I took all the government manipulations and interventions that I'm concerned about that comprise my core reason for owning gold and why I'm not worried about where it's going. And I put them into a graph, and I thought, well, let's compare it to gold. And I couldn't get gold to show up on any graph, on any chart at all. So I thought, okay, I'm going to have to show not just gold supply. I'm going to show all the gold that's ever been mined in mankind, in the history of mankind. So I got a figure. I multiplied it by $1,300 gold, and now the the bar for gold actually did show up on the chart. Just barely. But you've got at 1,300 gold, roughly, and don't quote me on any of these figures, but it's roughly about $5.5 trillion of gold if you add up all the gold that's ever been mined in the history of mankind that we know about and that is still available above ground. The bailouts in the U.S. were just under 12 trillion, so more than twice all the gold ever mined. Negative interest rates are, the estimates vary, but let's say it's 20 trillion. Well, that's 4 times more than all the gold that's ever been mined. Total worldwide bailouts are over 16 trillion. The U.S. debt is what? Is it 20 now? Did it reach 20 trillion? So,
almost.
Yeah. So that's 4 times as much. And then I found out what the global debt picture is for all the developed nations, and it's $152 trillion. Again, all the gold ever mined was $5.5 trillion. So all of these government interventions and mismanagements and manipulations, all this stuff they've done, most of which has occurred since 2008, dwarfs the entire supply of gold that's ever been mined in the history of mankind. It's really quite astounding. And it's not even a fair comparison, because I'm comparing what they've done over the last 8-10 years versus all the gold that's been dug up for centuries that's still available. And it's also not fair because all the gold ever mined really isn't available for you and me to buy. Only, roughly 45% of that figure is available in investable form, meaning coins and bars or jewelry in India, something like that. So, that bar should even be half that size on the chart. Well, now it'd really barely be available. So it's really amazing when you go through all these, each factor, which is basically what my article is devoted to. It's really quite astounding, and it's kind of scary when you look at all of these government interventions and manipulations and compare them to gold. It paints a pretty ugly picture and a pretty stark picture, and any reasonable person would be forced to conclude, okay, how does this get resolved? That's the real question. What happens here?
And in part of answering that question, you led next in your article to talk about what happens to gold when a crisis hits, and having kind of discussed the multitude of risks that are inherent in our current situation because of the mismanagement of our economic world by the politicians and governments over the past decades. So when you look at what happens, does your net worth rise or fall in the next crisis? What do you look at in that question?
That's really a good question, because when I did this article, it was really sobering and angering to me to realize that my personal net worth has been directly impacted by what central bankers and politicians have done.
That's right.
My net worth, what they did lowered my net worth.
It stole from you. I mean, that's so innate and instinctive. We recognize that viscerally as human persons, is that the value that we create through the sweat of our brow and the work of our hands is ours. It belongs to us by virtue of our work that we put into it. And for someone to take an action that takes that away from us is stealing. I mean, it's wrong, and it runs counter. It grates against our very fiber of understanding the true natural rights of workers to own the result of what they build with their own hands. And that's, sorry, I just couldn't help jumping in on that one, because it's just it's so important to reality that anyone who takes from you what you worked for is stealing. So go ahead.
Yeah, I agree. And that's a core reason why I own gold, is because I don't think there's a free lunch. All these things are going to have some type of ramification or fallout. There's going to be another crisis, probably a series of crises, and gold will benefit from that. That's what gold is. It's a crisis hedge. It's an inflation hedge. And I think that there's actually 2 parts to that. One is that there's going to be a crisis. I think it's baked into cake. Even if Trump gets his wish list all fully completed, in a minimum, there's going to be inflation. We can talk about that if you want. But these things are baked in the cake. The cake is in the oven. Those things are there. You can't just wish them away with a magic wand, okay? So there's that reason that I own gold. But the other thing is, it's how government will respond to those crises that make me think that's going to double the price of gold after the crisis hits. So, gold will respond to the crisis. The price will. Our standard of living will remain the same and will probably go up. But it's when the government intervenes yet again in the next crisis and tries to head it off and tries to solve it and, that sort of thing. Their responses are always inflationary. And their responses, look in 2008, how they responded to that crisis. And if we get another similar type of series of crises like that, and I just don't see how it's avoidable at this point, gold will not only respond to that crisis, but it'll be the quote-unquote solutions that the government offers to those crises that will be inflationary in nature in some capacity, and that will push up the gold price even further. And it's at that point it'll be absolutely critical that you own gold and silver, because when there's a gold rush, there's nothing quite like it. And there could be other ramifications. Gold could be hard to get then. Premiums could really, really skyrocket. You may have to go on a waiting list to get it. It may only be available to institutional investors. Who knows? There's any number of ways this could play out. The bottom line for me is I want to be prepared for that now. So I'm continuing to buy gold now. I bought another gold buffalo here just a couple weeks ago. So I'm preparing for it because I just don't see that there's going to be a way out. I know how the government's going to respond. They've done this. They've responded with inflationary policies for literally centuries, for literally millennia. I know how they're going to respond, and I know what that's going to do to the price of gold. And so just one last comment on this. I really think most people think gold as a defensive tool. It usually is. It will be defensive coming up, but I really think the other part of this is it's going to be an offensive investment for us. In other words, you're going to make a lot of money. You're not just going to protect your standard of living. It's actually going to grow. I think there will be some kind of wealth transfer, and the greater the crisis, the more likely that is to come true. And so I do view gold and silver as an investment in the sense that I'm going to profit from it. I'm going to make money, not just maintain my standard of living and be defensive. I'm actually going to make money through this wealth transfer process.
Now, you mentioned a few minutes ago about now that Trump has been elected president of the United States, we've been hearing so much about how he's an outsider. He's not a career politician. He barely could get along well enough with the Republican Party leadership that they would even keep him on and get him endorsed and in there. That he's basically breaks every mold, tears up the script, and does it his own way. So if all that's true, then why wouldn't our outlook be that things are going to be handled differently going ahead on the next crisis? What makes you still have confidence that there's going to be inflation ahead?
That's a good question. Well, look at what he wants to do. Let's take him at his word. Like him, hate him, whatever, it doesn't matter. He's the president, and we got to deal with it. So if he gets you can go on his website and you can look at what I'm going to do in the first 100 days, type of thing. So he wants to lower taxes. He wants to build out infrastructure. So right away, those two things, we're talking trillions of dollars just in those two things, trillions. Okay, so debt is going to have to go higher. So right there, you've already got higher inflation. You have other countries as well, Europe, Japan, they're all focusing on infrastructure. Interest rates are probably going to have to go up. The U.S. dollar is probably going to weaken. Volatility is going to go up. So, and not only will rates go up, but real rates are going to, which is the real driver of gold, by the way. It's, the nominal rate minus inflation. That kind of thing, lower real rates are going to drive gold. Really, you add all that up, and you couldn't design a better setup for gold than that, a better situation for gold than that kind of scenario. The bottom line for me is that government spending is going to increase under Trump. He's going to try. He's going to do whatever he can. And more government spending means a lower devalued dollar. And at some point, there has to be a reckoning with all these policies that they've had and all the debt that's been run up. And that's why I believe there's going to be at some point real inflation, not the kind of inflation we have now, but serious inflation that makes headlines. And of course, gold is, the number one asset to protect against inflation.
All this talk of inflation leads me back to an interesting statement that Mike Maloney makes in his book about gold and silver investing. And he talks about before we get to large-scale inflation, he sees a deflationary period preceding that. First of all, if you can help us understand why that's Mike's prediction. And secondly, if gold is a hedge against inflation, then is it actually the opposite of an asset when you're looking at a deflationary period?
That's a fair question. But think of gold as not just an inflation hedge or maybe a deflation hedge, but a crisis hedge. It's really it's all about crisis. It's about chaos. So let's say we do get deflation. He thinks we're going to get deflation first. The money supply has been continuing to drop and drop and drop. And he thinks another recession is either here or very soon coming, irregardless of the fact that Trump has been elected. Deflation's all about I'm sorry, not money supply. Did I say money supply? It's about the money multiplier. So you can go on the Fed's website and look at that. It's very, very low, and it continues to fall. He thinks the inflation will result from government spending and really pushing that money multiplier up a lot higher, making people feel a lot better about the economy. So the economy may actually, under Trump, appear to get better first. And maybe it will. We can all hope for that. But when the economy gets better, you're going to have the number one driver of inflation set in. And the number one driver that all these analysts look at is wages. So when wages start to go up again, when you see that, that's really going to be a clue that, okay, inflation really is real inflation, high inflation is around the corner once wages start to go up again. So did I answer your question? I'm not sure if I
think so. And but specifically holding gold in a deflationary period, does your gold actually lose value temporarily? Yeah,
it could. If we have a crisis like 2008, if it's quick and sudden and shocking, a shock to the system type of thing, yeah, gold is a liquid asset. And a lot of reason it was sold in 2008 was for its liquidity purposes. A lot of people weren't necessarily thinking they didn't need gold, but they had to sell it to cover other positions that were obviously losing a lot of money. So yeah, it could, if it's an overnight shocking type of environment, where the S&P fell, 40-50% in 1 month, back in 2008. But a real deflation where, the money supply is contracting, that's usually not something that is just a 1 day or 1 week event. That kind of crisis can really push people. A real true deflation can last for months or even years. And that kind of event can push people into gold. And the best example, of course, is the Great Depression. And a lot of people say, well, wait a minute, the gold price was fixed during the Great Depression. It was. But what was the only form of gold that investors could own back then? Well, it was gold stocks. And gold stocks went through the roof. They went up 400% and 500%. And this was the producers, not even the juniors. The juniors were, a lot of the better ones were 10-baggers. This is during the Great Depression, while there's, soup lines and falling unemployment, people are starving, all of that's going on. And gold stocks are going up 400% and 500% during that 3 to 4 year period. So the only form of gold they could own during that time, during the worst deflation we've ever had, was gold stocks, and they rose. So, nobody really has it all stood up and how this is going to play out. Nobody knows exactly how it's going to play out. It's probably going to be messy. It's going to be dynamic, meaning there's going to be several things going on at once. And so even if we get a deflation, there's going to be other issues going on as well. That environment, a crisis type of environment, I mean, the number one safe haven people think of is gold. It won't be bonds, and it won't be the U.S. dollar. It may feel that way at first. It may look that way at first, but ultimately it's going to be gold.
And as we look forward to the very real and present danger of one or many crises in the years ahead, you're saying that it's the government's action in response to those crises that's really going to have the major impact on gold. And it's also, by implication, when you talk about gold as a calibration of confidence or a hedge against crisis, it's the sentiment of the people, the awakening of the people to the real risk that they're under, that will be magnified and cause a flight to gold. So it'll be a disproportionate reaction to whatever was happening financially will be focused, or like a lens focuses a sunbeam. It'll be focused down into gold as everybody tries to rush to that limited safe harbor.
I remember going. I was flying somewhere, I don't remember, and I was waiting in an airport and sitting at a bar, and everybody, and I am dead serious about it, everybody around me was talking about, this was 2006, was talking about real estate. Every single conversation at the bar was about real estate. It was the peak of the market, and I think that's what we're going to have in the gold market. And I think that's where we're headed. At some point, I think it's going to be inflation, but whatever the catalyst is, I think we're going to have a true gold rush. We're going to have a gold mania, just like we did in real estate, just like we've had in stocks before. We've even had it in gold before, back in 1980. I think that's going to happen again, and I'm simply preparing for it. And I think part of the reason, yes, is the kind of crisis environment that we'll have, but part of it will be the government's response to that crisis. And so, when something happens, if you're a deflationist, I don't disagree with you. I simply ask you to continue reading the book. It won't be the last chapter. How would the government respond if we really do get a true deflation? Their response is going to be highly inflationary. They'll do more money printing. They may not call it QE. They may not call it quantitative easing. They may call it something else. I mean, QE was a new term back in 2008. So they'll call it something else. But their basic response at its core level will be inflationary in nature. And my fear is that the crisis is bad enough that they overreact and push us into something really nasty. I mean, I seriously hope we don't get hyperinflation. But the risk of that isn't zero. I have to account for that possibility. The government is forcing me to prepare in some way for that possibility, because the risk is not zero and because I know how they're going to react.
Well, Jeff, you've given us some real interesting thoughts to think about as far as the impact of government interventions in proportion to the amount of investable gold that's out there and the likely way that plays out. Before we end tonight, are there any other thoughts that you'd like to leave with our viewers? I work for a bullion dealer, so I don't want to give some cheap promotion or something. But before I even worked for a bullion dealer, I really believed in owning physical gold and silver. And it's not because I'm a gold bug. It's because it's the safest form to own. It's something that's private. It's confidential. It's a tangible asset you can hold in your hand and take with you anywhere. It's highly liquid. I mean, you can't get that kind of, asset, today in today's world. Everything's, more transparent. It's a lot of paper, stocks, bonds, even real estate, that's not liquid. It's comes with a lot of, costs and things. It's not easy to deal with. So there's very few assets in today's modern world that give you the advantages that actually physical gold and silver do. And I just believe in owning it. I don't own any paper gold or silver products at all. And I own probably close to an equal amount, probably a little more gold than silver, but I own,
a fair amount of both. I am overweight gold and silver at this point in history. And for me, I just continue to accumulate because I believe this is where I need to be with my finances right now. Thank you very much, federal government.
Well, Jeff Clark, Senior Precious Metals Analyst at goldsilver.com. Thank you so much for joining us for this first time here on Reluctant Preppers.
You're welcome, Duncan, and I'll be happy to come back again someday.